Hello, everyone. Welcome to IDLC's second quarter earnings disclosure session. My name is Sam, and I'll be your host for tonight. I would like to let you all know that the presentation slides are soon going to be on our website. We'll be providing the link to you shortly. And in case there's any technical error, please stay with us. We assure you that any kind of interruption will be taken care of very swiftly. So without further ado, I'd like to quickly introduce you to our panel. Starting, we have our Group CEO and Managing Director, Mr. Jamaluddin. Jamal bhai, if you'd kindly show yourself.
Hello. Hello.
Okay, we have with us our Deputy Managing Director, Mr. Syed Javed Noor.
Hi.
Thank you, sir. We also have with us our Group CFO, Mr. Masood Karim Mojumdar.
Hello, everyone.
And finally, we have with us our finance teammate, Ms. Faria Mahshabin.
Hello, everyone.
Thank you, Faria. So without further ado, let's quickly start with our presentation. I would like to ask Mr. Jamaluddin to please start with his opening speech. Jamal, over to you.
Thank you, Sam. Good day to everyone watching from different parts of the world. I would like to welcome you all to IDLC's earnings disclosure session. First of all, we are going to take a look at our half-yearly performance. At the backdrop of this, Bangladesh has seen a rise in COVID cases and even fatalities. However, government has been actively working to prevent any major shocks to the economy, and the financial sector of the country has continued to remain liquid throughout 2021. There were various reasons behind this liquid market. Remittance was a key driver. The country's foreign exchange reserve reached an all-time high, which was $46 billion at the end of June 2021. To ensure stability in the forex market, central bank purchased US dollar, releasing Bangladesh currency in the market. Government stimulus packages have also contributed. On the other side, government bank borrowing has been quite low. Moreover, there has been a slowdown in the private sector credit due to the pandemic, as all of you know, but deposits have grown to a great extent. During July 20 to May 21, credit grew by almost 7.58% and deposit grew by 14.47%. As a result, interest rates fell. The rate on the government bill on an average has dropped by over 600 bips in the last 1 year. The rate on average government bonds have fallen by over 350 bips. Inflation also fell marginally as consumption was lower due to the pandemic. Meanwhile, capital market has been quite vibrant compared to the first half of previous year. Under this context, IDLC achieved a profit of Bangladeshi Taka 1,035 million in the first half of 2021, which was 55% higher than half-yearly bottom line of 2020. The growth was mainly driven by our capital market subsidiaries, as our DMD Javed will elaborate later. For our financial verticals, we focused on preparing for the pandemic-stricken business environment by emphasizing on collections, making sure we are taking enough provisions in our books and aligning our loan growth with the market circumstances. We will continue to make efforts towards improving customer experience even further. Currently, we are ensuring that customers can open accounts and avail most of the services from the comfort of their homes. However, we are still providing on-premise services as well to ensure that customers of all demographics are happy with their experience. Now, I would like our DMD, Javed Noor, to take over and carry the presentation. Javed.
For your nice elaboration. I think bulk of the operating environment you have already covered. Should we proceed with the presentation?
Yes, Javed bhai. Mojumdar bhai will be controlling the presentations from his end.
Yes,
As our managing director and group CEO said that the liquidity situation has been very, very comfortable. Market has been liquid because on the back of high remittances, record growth. I would say it's around over 36%. And to keep the market stable, central bank bought roughly $7 billion worth of US dollar from the market, which injected liquidity of over 650 billion. Moreover, next slide, please. Moreover, government also supplied liquidity into the market, roughly around 1.24 trillion taka, which is equivalent to $14.6 billion. Since there were low activities, development activities, government expenditure also dropped. As a result, though government has plan of borrowing roughly 797 billion taka from the market, it rather showed repayment of roughly 42 billion. Since because of the COVID, the activities were low, we have seen credit growth around 7.5%, which is historical low. However, with the accumulation of wealth, the deposit grew around 14.47%. The inflation was stable at 5.26%. Food inflation declined from 6.5% to 4.8%. However, with the rise of the oil prices, the non-food inflation has increased around 5.86% from 5.22%. With regards to the capital market, we have seen slight bit correction in early 2021 first quarter. However, it recovered very quickly in the quarter two, and overall, the DSE index has generated over 13% return in first half of 2021, and daily turnover has reached over 12 billion taka, which is highest after 2010. And this was all contributed because of the low deposit rate. People are pumping money into the stock market. And regulator is strongly emphasizing disintermediation, which is basically they're asking the corporates to borrow from the market directly. And we have seen 7 banks are issuing roughly 40 billion taka worth of perpetual bond, which will be later on listed. And also very recently, a local conglomerate is issuing roughly 30 billion worth of green sukuk bond. I would say that we have delivered, IDLC on a consolidated basis has delivered result of roughly 1 billion taka as net profit after tax, which is 55% higher than last year. Despite the fact that we had dip in our financing business because of the tough operating environment, because of the higher net profit after tax, the return on asset has increased by around 21 bips. Accordingly, the return on equity has also increased by 184 bips to 6.7%. Since the tough and operating environment was tough and we were cautious, and also we, because of our strong monitoring, our repayments were collected more or less regularly. We've seen the customer advances decline by around 3% to 89.9 billion taka. To manage the liquidity, we also managed the non-bank deposits slightly bit down by around 2% to 66.2 billion taka. Move on. As indicated earlier, the capital market subsidiaries has performed fantastically, despite the fact that IDLC Finance has delivered roughly 10% lower on the net profit after tax basis. However, on a consolidated basis, we grew by our net profit after tax grew by 55%. Though we have seen dip in net profit after tax for IDLC Finance, the operating profit was up from the last year. It's just because of the fact we decided to basically put in the regular provisioning policy, which the pre-COVID provisioning policy, we decided not to avail the deferral benefits from which was time to time advised by central bank. So we decided to take the hit and keep our balance sheet strong. I think now I would like to invite Mr. Masood Karim Majumdar, our CFO, to elaborate the numbers. Thanks.
Thank you, Javed bhai, for elaborating our environment and background where we are working and a bit snapshot. So I will go a bit further on item wise, like I will explain some year-on-year performance metrics, of course, on consolidation basis. First of all, in case of loans and advances, we see almost remains same as Javed already said, almost 3% decline from last year. But if we compare with the first half of 2020, you can see it's remain almost same just because of pandemic situation, long lockdown and government holidays, and relatively there was less business activities in this period. So we are actually maintaining our portfolios at the same level. Beside our non-bank deposit has compared to last year, it has decreased a bit. But if we compare with the first half of last year, it increased by 4%. Though our total deposit is I would say 7,500, which has decreased by 4%. Our main focus actually on non-bank deposit. Though the loans and advances has decreased, the deposit growth, I would say it's a managed growth. As there was less demand from lending side, we cautiously actually maintain our deposit side. On the other hand, if we look at the P&L item, like net interest income increased by 14% over same period of last year, mainly because of our control cost of fund. And in case of fees and other income, here we see a huge growth of 177%. This is mainly because of, as Javed bhai already said, capital market has shown uptrend over last 1 year. I would say that our brokerage business has able to book some brokerage commission and capitalize the opportunities of higher daily turnover. And at the same time, investment income, we have booked 77 crore investment income compared to 43 million negative last year. This is mainly because of, as you already know, from July last year, the capital market are showing its bullish trend, and on that cases, it shows offered some opportunities, and we are able to capitalize that and book some capital gain. That's the main reason of that investment income. On the other hand, OPEX operating expenses increased by 17%. There is mainly few variable costs, like marketing and branding expenditure, some salaries and expenses increased by that. That's the main. And the main part is, I would say, the specific provision on loans and leases. As our DMDN said, after withdrawal of central bank relaxing provisioning policy, we are now following our previous standard provisioning policy, which was prevailing before pandemic. And for that reason, we are keeping almost 55 crore provision for loan losses. In last year, it was negative 94 million. That's why it's showing that 700% growth over last year. And in case of provision charges against unrealized loss of investment, as you know, we have said in earlier earnings call that in case of subsidiaries proprietary investment, we used to follow the relaxed provisioning policy of Bangladesh Securities and Exchange Commission. But from this year, we are not following that circular. We are strictly following mark-to-mark basis, and we are providing 100% for unrealized loss. I can say after providing 134 million, our capital market investment is fully covered by our provision. There is no uncovered unrealized loss at this moment. And going forward, if market goes further, we think we will be able to release this provision in future if needed. And on the sum of that, if we see the net profit, as earlier said, is we could report 103 crore net profit compared to 66 crore of last year. Moving on, if we go further details of operating expense and income, here we will show on quarter-on-quarter basis. On quarter in Q2 2021, if we see the net interest income increased in 20 compared to 2020, but fell compared to last 2 quarters, mainly because of, as earlier said, increased interest suspense upon withdrawal of loan classification freezing, and beside suspense held as a caution. On the other hand, as there was less business activities and lower portfolio growth, we could able to book less interest income compared to Q1 and Q4 of 2020. Beside, our operating income has grown from last year, but less than last 2 quarters, only because of capital gain book in Q4 and Q1 was higher than this quarter. But if we compare it with Q2 or Q1 of last year, it has increased because of our fees and investment income and higher net interest income. As I already said, in OPEX, we are actually additional marketing expenditure, higher disbursement related expense, and HR compensation in H1 2021. That's why it's a bit higher than last 2 quarters of 2020. But at the same time, as the income has increased, our cost income ratio remain at 40%, around 40%. But I think we'll be happy to keep the cost income ratio at 40%. Our target will be remain that to arrest our cost income ratio at 40% level. Going further, if we see our balance sheets picture, the balance sheet has grown by 2% over last quarter. It's mainly because of treasury activities, arbitrage activities. That's the main reason for 2% balance sheet growth. As earlier said, loan and advances has de-grew by 5% compared to last quarter, and term deposit and non-bank deposit also growing at a managed level, slightly decreased to support the loan growth. If we go further, loan book composition, as I already said, if our loan book composition is composed of like consumer, SME, and corporate. In 2020, our loan book composition was like SME was 36%, consumer was 32%, and corporate was 32%. As I said, our SME and consumer has been able to remain their portfolio at the same level of 2020, but our corporate book has decreased around 14% to 15%, mainly because of few large account settlement and few takeover and less portfolio disbursement. Reason the composition has just changed. This now, as of 2021, our composition stood like SME is 38%, consumer is 34%, and corporate 28%. But I think if the lockdown over and situation bit improve, then our composition will further improve. Our corporate will increase their activities, and I hope that will reach to 30% level at least. If we go further, restructured of portfolio structure. I think there are a few questions in someone's mind that what is the status of restructured portfolio of IDLC? As you know, as Jabadra already said, the Bangladesh Bank offered relaxed the provisioning policy and the policy, and that we availing up to 2020. As of, if we see the portfolio of 30th March 2021, our total portfolio at 9,300, of which almost 43% of portfolio was restructured. Here actually we mean restructured, rescheduled and deferred portfolio. So our almost 43% of portfolio of total portfolio is restructured. If we see the same statistics of the restructured portfolio as of today, I mean as of 30th June 2021, that's the proportion remain the same, 43%, but the portfolio has decreased by 230 crore. But it's a good sign to me that if you see the almost 75% of dues has been collected. I would say that restructured portfolio collection ratio is 75%. At this pandemic situation, it's 75%. I hope when the situation improves and lockdown lifted, our main focus will remain on collection, and that will actually help us to reduce and address our restructured portfolio and decrease it further. And in case of NPL, as you see, it's a bit higher than last year. Last year it was 1.79, now it's 3.07. Before giving any explanation, I would like to say that if we see the NPL ratio of our IDLCs over 2 or 3 years, here you can see that from 2018, normally our NPL ratio remain at around 2.8 to 3% level. But in 2020, it was decreased because of at the end of 2020, we write off around 35 crore amount of loan. That's the reason the NPL ratio dropped. But it has, as we already not following the deferred policy of Bangladesh Bank, the NPL ratio slightly increased. But our main focus will remain here, as our CEO has already said. Our main focus will be to address the restructured account. Our main focus will be the collections and business activities. And beside that, and also as portfolio also decreased, the NPL remain the same. The ratio has gone up. So by the end of 2021, I hope our focus and target will remain to arrest that NPL ratio at 2.8 or around 2.8 range. And in case of shareholders' return, our return on asset is 1.7%. I think it's one of the highest in the industry, 1.7% return on asset. Return on equity is almost 15%. In this situation, I would say 15% of return on equity. And earning per share is 1.4 for the quarter. If we add 2 quarters, it's 2.6 for the half year of 2020. And book value per share remain at around 40 taka per share. It has increased a bit from Q1 as business profit has increased. Capital adequacy, I would say our capital adequacy ratio remains 17.3, which is way above our regulatory requirement. Of course, it's consolidated basis, and for standalone basis, it's 14.5%. As you know, our capital adequacy ratio regulatory requirement is 10%. We are far above of our regulatory requirement. And in case of loan to fund ratio is 72, almost 73% at this moment. As many of you know that our regulatory requirement is 95%. We are way below our regulatory requirement. We have much more room for further improvement. And I hope once situation become normal, this ratio will increase further. On that note, I would like to again invite our Javed Bhai for the next slides.
Thanks, Maninder Bhai. Just the other highlights, we have launched a digital deposit product where the customers can deposit up to 500,000 taka as one single deposit without up any physical form and wet signature. This has been possible because of the central bank's new KYC policy, where IDLC was the only non-banking financial institution participated in the pilot project around a year back. we have big hopes with regards to digital deposit, where customers will not have to basically come to our office, or our representatives will not have to visit the customer to collect the checks and conveyance. We have launched IDLC Income Fund, is the first debt-based open-ended mutual fund in the history of Bangladesh. We think that it has huge potential. It itself can reap IDLC's book. We have raised roughly 14 billion taka as lead arranger for bonds for the two large institutions. We've been awarded as the best investment bank in Bangladesh at Finance Asia's Country Awards. In our way to improve our customer experience, we have introduced automated client communications at various stages of our customers' journey with us. As far as the CSR is concerned, CSR activities are concerned, we are constructing 4 health centers with UNICEF in the selected tea gardens of Molawi Bazar to improve their maternal and neonatal health. We have provided food support to 9,000 families in 32 districts for 4 development partners. We have installed 2 water purification plants in Dakop, a remote village in Khulna. We have offered surgical repair of fistula for 20 marginalized women with a local NGO. We have also provided a freezer ambulance to a local NGO for carrying the dead bodies who can't afford the freezer van. Moving on. Going forward, we see that in this difficult environment, we'll continue to maintain liquidity buffers, because the environment is uncertain and we're not too sure what the central bank would come up to combat COVID-19 situation. And we'll also focus strongly on monitoring our portfolio quality through regular communication with the customers. We see significant opportunity because of the low interest rate environment and very high liquidity. The capital market should be buoyant, and we should take the opportunity before the liquidity dries up. Because with the taking advantage of the eKYC, we plan to launch digital deposit through MFS partner, so that we can reach a larger base of populations, which we couldn't have targeted earlier. A community initiative and other CSR initiatives will continue. Thanks. Open the floor for questions. Over to Siam.
Thank you, Javed, for your wonderful presentation. We have a few questions. First of all, if any of you have any questions, please feel free to type them into the comment box and we'll read them out. So our first question is actually regarding the capital market. Our viewer has asked, roughly, what's the current capital market exposure and what % of equity are we currently invested in?
I think at this point in time, our equity exposure is around 25% of our equity, which is around close to 4 billion taka.
Thank you, Javed Bhai. We're trying to wait for a few more questions. Okay, as we wait for our audience to put in some questions, we'll read out some questions from the emails. So one of the questions is regarding the interest rate scenario, that currently the interest rates are very low. What are your expectations for the interest rates going forward for the rest of the year?
I think central bank has just rolled out their monetary policy statement this today or yesterday, if I'm right. So what central bank will probably support the expansionary policies, which indicates the interest rate environment will be low. But if the COVID continues for some time, we will see the usage of capital will be low. There will be high capital formation. The deposit rates will remain slow. In 6 to 9 months, we need to observe the situation. If the COVID situation improves, the economic activities will restart, and we may see the interest rate to rise again.
Thank you, John. Our next email question is also regarding the capital market. It's basically saying that we have made a lot of profit from the capital market so far, but what is our expectation in the second half of the year?
I would say there is no expectation. We would monitor the market and monetize all possible opportunities. We'll remain cautious. The one thing about capital market, you need to be cautious. Otherwise, it can backfire. It can take out all the gains in one single mode. So we'll remain cautious, but it's difficult to comment how much we are going to make.
Thank you very much. Our third question from the email regarding our digitization. It's saying that the EQIC guidelines have been launched by the government. So can we expect any digital products? We have already mentioned, actually, viewer, for the digital deposits, but it's asking overall into our product portfolio. What are our digitalization efforts?
At this point in time, with the eKYC, you can have deposits up to 1 million taka. Either in GPS or basically in the straight FDR format. So maybe we will, on the base of eKYC, maybe we will launch few more products, but then again, it will be completely dependent on the central bank's relaxation. If central banks relaxes the transaction up to 2 million, then things will be slightly bit different. But on a different note, our sales activities, at least for the retail part, has been completely digitalized in the last 2 to 3 years. On the back of that network, I would say the origination and the processing engine that we have built up, probably our customer acquisition post-pandemic situation will increase manifold. The operation has become extremely efficient. We will monetize these on post-pandemic.
Thank you, Javed. We've received some questions from our audience members as well. So the first question is, are you going to increase your investment in bonds?
Again, bond is opportunities. It depends on the interest rate cycle. At this point in time, the interest rate cycle is absolutely at its low. So probably no further investment in bonds. Rather, we'll try to liquidate a few more to book some capital gain if required.
Thank you. The same audience member has also asked, what steps are you taking to improve collection ratio in the prevalent lockdown?
In the prevalent lockdown, it's difficult to communicate to the customer directly because customers are not giving access. Many of the customers are not giving access on the ground of COVID. And at the same time, while almost 60% of our customers are paying regularly, and they didn't require any restructuring. The balance 40%, I would say, bulk of them, as the situation improves, they will continue to pay. But a part of the customers, we may need to take legal actions. But for the last 1.5 years, the courts are closed. We have very little cases were disposed. So it's difficult at this point in time. Is a persuasion that will continue, will remain close to the customers, but for the errant customers, probably will not be able to take much of an action till the situation improves.
So at this point, I would like to compliment you see, now we have a big business in the business areas. We have big sales force. about 550 sales force we have. And now since, the disbursement has been a bit slow, so what we have done, we have given them target on collections. So accordingly, since the number of headcounts are engaged in collection, apart from our regular special asset management department, so collection has already improved and it will keep on improving. So there a significant improvement at the end of the year through this by using our sales force for collection.
Thank you, John. Thank you for the addition.
Thank you. Our next question is actually about target loan growth. Our viewer has asked, what is the loan growth for 2021 and 2022?
2021, we had a target growth of over 10%, but at this point in time, unless the operating situation improves, we are comfortable. We don't see much of a growth. 2022, again, I would say it all depends how the pandemic situation pans out.
That's right. Thanks, Javed. Our next question, our viewer has asked, does IDLC require its borrowers to comply with anti-child labor and factory building safety standards?
I think at this point in time, whether we like it or not, if we are financing any of the ready-made garments factories, if they're working with large buyers, they'll have to follow either Accord or Alliance compliance standard, which bars everyone to deploy child labor, or basically, as far as the structural part is concerned, they need to be compliant with. So when we do, we check whether the customer has a compliant factory. That offers a lot of comfort to us. And in case of the other areas, other factory buildings, if we are to fund anything, the built-in regulation is that if you are operating a generator or if you are taking anything, you have to have fire clearances, you have to have all the other environmental standards maintained.
Right. I'll just wait for our viewers if they want to post any more questions. Okay, we do have one more question actually. Our viewer has asked, operating expenditure has been increased from 32% to 39% in this quarter. I think he meant the cost to income ratio has increased. What are the basic reasons?
Mojumdar bhai, would you
I think, Mojumdar, why the operating expense, actually there are two parts. One is variable parts and the on a fixed part. So variable part has been taken into the salary and allowances. So Mojumdar, you can tell, I think, better.
Yeah, as you said, that's the main reason. Basically, two reasons of that increase. One is salary and allowances. Another is for branding expenditure. So as you know, in first half of 2020, that moment we were very confused about where the market is going on and how our performance will be. We were a bit confused. At that moment, we didn't actually provide for any performance bonus, salary increment, all that. But at the end of 2020, actually, we did very good. On that ground, in 2021, we provided for performance bonus, and we that's the main reason actually for this. One of the reasons for this growth. And another reason in brokerage commission, there are few variable expenditure which relate with the volume. So as the volume increases, that the commission has also been increases. That's the three main reasons. One is salary allowances, commissions, and brand and marketing expenses. These are the three reasons for this increase of cost and income ratios.
Thank you, Mojumdar bhai. If I might just add, viewer, since he mentioned 32% to 39%. So if you look at the operating income, it has actually gone down a little bit in Q2, and that was another reason for the increase in the ratio. So I'll just wait for any more questions if we have any. No, Mojumdar bhai, I think we've reached the end of the question and answer session as well, since there are no more questions. So I'd like to thank everyone for all of your active participation. And with that, if Jamal bhai would have any closing comments, I'd like to pass on the floor.
Thank you very much for attending this earning disclosure session. And I, in fact, seek the cooperation from all the stakeholders and our other even shareholders also regarding because we are passing through a very abnormal situation. So in the first half of at the end of the last year, we predicted that the pandemic situation would improve significantly, which improved, but only for a couple of months. Then from April, it has started worsening. So in this situation, actually, the budget that we have made regarding the disbursement and the portfolio growth, we may not be able to achieve our budgeted target in terms of portfolio, but we will maintain bottom lines, and that we have full confidence that we will be able to maintain our bottom lines, and we will be able to give dividend to our shareholders, and also we may be able to share some of our profit for the social cause, for CSR activities, for providing the poor with food and other things in our society. So I wish all the best and hope that we meet your expectation.
Thank you, Jamal Bhai. With that, I'd like to end this session. Thank you, everyone.